Okay. Hi there, everyone. This is Patty D, your coach and job strategist. Once again with Dr. Demartini. I feel blessed. I feel so blessed. So John and I today are going to talk about the wealthy mindset. The wealthy mindset, where we are today and where we're going. Because here it is. We're living in the world of uncertainty, and we're not going to talk about the uncertainty anymore. We're going to talk about what we can do today to start building our financial wealth. John, thanks so much for being with me again
Good.
today.
I'm looking forward to this because this is something I think people probably appreciate.
Absolutely.
First thing I want to say is, and I hope everybody who's listening gets a pen and a paper out maybe, or gets their cell phone out and ready to type.
I have mine.
Good. I'm just going to hit people with some really grounding principles. First of all, money, finances, circulate through the economy from those who value it least to those who value it most.
You're going to talk about that more.
Yeah, let me elaborate on that. Because
yeah.
Let's say that you're an individual that you have a very high value on learning.
Mm-hmm.
You go to seminars and you attend classes and you read books and you're studying personal development. And you have a very high value on learning. Whenever you get money from working, whatever the source is,
Mm-hmm.
you tend to put it into books, seminars, education, etc. And let's say that you give it to somebody who has a high value in the education, who's delivering that education, or those selling of those books, and they have a high value on travel. And so the second they get money, they go on trips.
Mm-hmm.
They give money to the airlines, the hotels, the tourist centers, and they go on trips. And they buy also books on tourism. And then you give money to the airlines and the tourist organizations, and they have a value on spirituality. And they end up funding philanthropic spiritual adventures or things. And then the people that are putting on the spiritual things, they have a value on serving the culture. And they put money into philanthropic adventures and raise money for philanthropic.
Right.
And then they build houses for people that have no houses. But then the builders, they have a value on wealth building. And so they take the money and they buy the land and they build the properties, they sell them and they take a profit. And then they make sure that they put their money into something that goes up in value, which is either land that they develop or assets in this form of some sort of a properties that upgrade the property, or some sort of a stocks or something.
Right.
And so the money literally moved and migrated through 5 individuals until eventually got to somebody that had a value on buying assets.
Right.
So if you have a higher value on buying consumables that depreciate or liabilities than you do on assets, then you're going to be working your life for money. And if you don't buy assets, you're going to be a slave to money. If you buy assets and put money into your pocket and start give a return on investment, it starts working for you. So the first thing you have to realize is that money circulates in the economy from those who value money least to those who value money most. And people that value things that money buys, that are consumable items, more than assets, won't get ahead financially. They're going to struggle their whole life financially. Now, they'll have great things that they bought, but most of those things go down in value if they don't put it. An asset is something that puts money in your pocket. Right. And then liability is something that takes money out of your pocket. So until you have a really strong value on asset accumulation, where it's actually giving you money passively, probably financial independence is just a fantasy. And many people, and I've asked, millions of people, how many of you want to be financially independent? Everybody puts a hand up. Sure. But 99% of the population don't make financial independence. And 99% of the population don't really know the difference between an asset and liability. They don't have a plan. The lifestyle of the rich and famous is financial independence. But there's people in Hollywood that make millions. They're in debt. And they got big houses and big this and big, and they keep buying things that go down in value and they have no assets. Be surprised how many celebrities are broke. I've met them. I've worked with them. I guarantee there's a lot that aren't as wealthy as people think.
Right.
So it has nothing to do with how much money you make. It has everything to do with how you manage what you make.
Mm.
And the hierarchy of your values dictates how you manage it and where it goes. When I was 27, I had a big kind of a wake-up call. Because prior to that, most of the money that I had made went to buying things.
Mm-hmm.
At 27, almost 28, I decided to buy assets where money's going to start working for me. So I would always make money and then I would end up blowing it, spending it. It would just disappear again. It'd go right out as fast as it came in. It wasn't until I turned 27, almost 28, that I started to actually have it work for me.
Mm-hmm.
And until I became more, see, deferred gratification is essential for wealth building. Immediate gratification is going to cost you wealth. Long-term vision and deferred gratification is going to build it.
That's
And if
important.
you want that money
Right.
to get now and you want things right now, you're never going to get financially independent. You're going to be working and buying stuff and then be back to zero again. So knowing the difference in asset and liability is essential. One puts money in your pocket, one takes it out. Having a high value on actual financial wealth building,
Mm-hmm.
to have a real value on it. You can't just say, I want to be financially independent and say that. You have to be willing to take the money you make now, live beneath those costs. You know, your costs have to be down. You have to have a profit. You have to put a portion of that profit into first savings to stabilize you, and then into assets, actual investments. The average person doesn't know much about investments.
Right.
You have to buy investments where it's starting to work for them. That's either stocks or it has to be some sort of land value that goes into rental properties, but it's not lifestyle. It's not buying a house. That's lifestyle.
Right.
Not buying a car unless that car is making you more money than the cost. Those are all lifestyles, and people confuse lifestyle with wealth. And I learned at 28 that I'm going to take a portion of whatever I earn and I'm going to start buying assets. And the moment I did, I noticed that my emotions got in the way. So I had to do it electronically. I did it electronically, just like a bill. And I learned that from an insurance company. An insurance guy sold me some insurance, and I noticed I never missed paying it because I did it electronically. It was out of sight, out of mind. Never thought about it. They just debited it out of my account, boom, and it was done. So I put up an automated savings program 38 years ago or so, where I automated savings from my business account into an investment account, first into a savings account until I had a few months worth of liquid capital, where I had a cushion account. And then I started putting in, buying index funds. And it's a simple thing. Anybody can learn how to do that. It takes 10 minutes. And I started buying index funds. And I did that for 38 years. And 9 years after I started, I was financially independent. Now I'm 20-fold financially independent because of that. So what I did is I learned to automate them and put strategies in place. And as every quarter came along, I increased my amount that I saved into those accounts. So I didn't wonder if I was going to make it. Right. I forced it out, and then I made it. And I did that for years. And it went from $200 a month. I was doing $50 a week, $10 a day for 5 days a week when I started. That's all I could afford to do, $1 an hour. And I was a doctor. I was overwhelmed by that because I had all these bills. And I just did that. Then I made it 300, and then I didn't miss it. And I noticed I got an extra client. Then I made it 500, didn't miss it, got an extra couple clients. Then I made it 750, didn't miss it, and got another few clients. Then I made it 1,000. This is all within 1 year. I just raised it every quarter. And then at the end of the year, $1,000 was going into savings. And I ran a projection of where I would be 1 year, 5 years, 10 years, 20, 30, 40 years. And I realized in 34 years, I'd be a millionaire. Whoopie-doo. But that was a goal at the time in 1982, 83.
Right, right.
So then what I did is I didn't stop there. I decided I was going to increase my savings every quarter 10%. Because I figured at the end, every 3 months, after 90 days of doing a habit, I could push myself just a little bit more uncomfortable and push a little bit more into savings. Because I figured that the worst thing I can do if I saved is I got the money to pay the bill. There's no risk in saving because I got the money. What's risky is buying stuff and living beyond your means because you got no money to pay the bills and you got debt. So I just increased my savings. And every time I increased my savings, my business grew. It was amazing. because I learned that when you manage money wisely, you get more money to manage. Unbelievable
Right.
what happened. So I made it 1,100. Then I ran another projection and I knocked off 3 years. I went down to 31 years to being a millionaire. Then I made it 1,210, another 10%. I'm now down to 28 years. I'm a millionaire. And then I did it $1,344. And now I'm down to 24 years. I'm a millionaire. Just a little over 24 years. I'm a millionaire. Then I made it 1,600 something. I increased it by what they call a Pascal triangle, 10% every quarter. And I ran another projection. I'm down to 20, just under 21 years. And I just kept doing that. And all of a sudden I kept doubling it. Every 2 years, the amount I was saving doubled. And I was accelerating my debt payments. And all of a sudden, 2 years, at the 3rd year mark, I was at 2,000. At the 5 year, 4,000. At the 7 year, 8,000. I was at $16,000 a month on the 9th year. And I'd already reduced my debts, and I'd already had compound interest working for me.
Sure.
And I reached my financial independence. At the time, I wanted to be able to have passive income of $100,000 a year. Now I'm at $2 million a year passive income. But at the time it was it was 100,000. But I didn't stop there. I pushed it to 32,000 a month. Then I pushed it to 64,000 a month. Every 2 years it doubled until it was $128,000 a month I did. And my business kept growing and opportunities kept surfacing. Movie deals. All these opportunities started showing, because when you manage money wisely, you get more money to manage. When you value yourself, you attract people to value you. And money circulates to the economy from those who value it least to those who value it most. And it circulates from wherever the most chaos with money is to where the most value and most structure is. Money doesn't go just where chaos is. It goes where somebody knows how to manage it. So I structured it. And that was the wisest thing I ever did, because the amount I was saving was growing. And what I used to make in a year, I was saving in a month. It changed.
What's fascinating to me is as you increase the value and as you saved more, your business grew.
It grew. And it got more efficient.
And it was coming to you.
It got more efficient. Now, the wealthiest people that I've interacted with, I've met and interacted with 30 billionaires. I've met many people that are very wealthy, centimillionaires, multi-centimillionaires. And what I found is the people that are wealthy are more conservative, and they have more cash reserves, because they know they do not want emotions interfering with wealth. And the people that have cash reserves right now, the last month, like myself, got to make a fortune, because the coronavirus did exactly what I was waiting for, crashed the market. So I got to buy up the market, just buy up the market at half price deals. And now it's gone up 5,000. It's gone up 5,000 something points in the last 2 weeks.
Yeah.
And so it's just made me money just sitting doing nothing. So in the process of doing it, you want to make sure that you have a cash reserve of no less than 3 months, preferably 6 months or more.
Sure, right.
Of cash reserve, so you don't let the world on the outside ever distract you from your mission on the inside. Because people that don't have a cushion, don't have forced savings, are hoping to see if they can afford to do it. See, there's a thing called entropy in the universe. Entropy is a tendency to go from order to disorder. And anytime you don't have order financially, disorder will automatically occur. And unexpected bills, unexpected cost, unexpected things will keep eroding your potential for growing wealth, because you're waiting to see if you're going to have any money at the end of the month before you pay yourself. The wealthy have always paid themselves first and then came up with how to pay the bills. The poor people always pay the bills first. If there's anything left over, they get whatever's left over. And there's never left over, because entropy makes disorder and gives unexpected bills. So you have to reduce the unexpected bills by forcing the savings and forcing the investments and forcing your taxes and manage money wisely. Because when you bring order and entropy to finances, entropy goes away. But if you don't, entropy will automatically erode your potential for building wealth.
It's
so you
interesting.
have to pay yourself first.
It's interesting, Dr. Demartini, because I was going to ask you, are the universal laws at work when it comes to work and money?
Absolutely.
And they are. So
totally.
like, okay, so you were talking about entropy, but is there more to add on that? Because that's
Oh, yeah.
fascinating.
If you look at compound interest, it grows by what they call natural log e's, which are mathematical laws of logarithmic growth and asymptotic growth. They also are involved in what they call factorials. And factorials are the inversion of factorials is called entropy. So let's say you have a cell. I mentioned this in the breakthrough experience, if you remember. You have a
Okay.
cell, and you go to two cells, you get 2 times as complex as 1. So
Right.
the factorial is 2 times 1. If it divides again, you get 4 cells. So now 4 times 3 times 2 times 1.
Okay.
4 times 3 times 2 times 1 is 24. So 1 cell is 1, 2 cells is 2, 4 cells is 24.
Okay.
8 cells is 8 times 7 times 6 times 5 times 4 times 3 times 2 times 1. That number geometrically gets bigger, and the complexity gets bigger every time mitotic division occurs. And so we get a very, very complexity as we grow. But if we don't have the opposite and bring order to it with the opposite of these factorials, which is saving money, which is then using compound interest in our favor to grow that way, we have to use compound interest to counterbalance the entropy of growth. If we don't, we automatically have unexpected bills, increasing probabilities of unexpected bills and unexpected uncertainties. Entropy is uncertainty.
Okay.
Negentropy is certainty. Whoever has the most certainty with money and structures it gets the money. It's the law of the universe. Whoever brings order to money gets it. Money circulates from where it's mismanaged and disordered to order. Once I learned that, I structured and put my financial house in order. People that don't know where they are, they don't know what their total liabilities and assets are, they don't know where their total net worth is. They don't know what they want as a financial independent state, as a goal. They have no goal, it's clear.
Okay.
They don't know exactly what it's going to take to get it and what outcome they want to give them that goal. And they don't have a strategy, are guaranteed never to get financially independent. They don't have a goal. They have no structure to it. And until they have order and put their financial house in order, it's not going to happen. It's not going to happen by prayer. It's not going to happen by metaphysical mysticism. It's going to happen by common logical sense that has proven itself through history. And all the people that did that, they get wealthy. It's very simple. It's not that hard. I mean, I've taught people, thousands of people how to do this.
Okay, so you can put your house in order financially if, in fact, you have 5,000, if you have 10,000, if you it doesn't. You could be in debt and have it in order, so you have a strategic plan to know where you want to go. Because saying that I'm going to be a millionaire 10 times over
doesn't mean anything.
Is countless.
It's countless. You can do all the affirmations until you're blue in the face. But if you don't do the action steps and you don't have the I guess you could say the values to put structure to it, it's not going to happen. That's not going to happen.
Okay.
There's lots of people out there in the New Age movement out there saying, I'm abundantly wealthy, and they're sitting there living day to day. They don't understand that money starts with one primary thing. You have to value it. The second thing is you have to value serving people, because there's no money if you don't serve people.
Right. That's right.
I have a book called.
Okay, so wait. I have I have a question, and then we're going to get to that book. I promise you, because there are so many people that want to be of service right now. Me being one of them, right? Because there's so many people living in uncertainty. They're wondering about the work. They're wondering about the money, and believe me, there's a lot of misadvice like going on out there right now. It just makes me want to pull my hair out. Like, please, people, if you're listening, do not apply to jobs right now. You're wasting your time. You're more apt to make money valuing the money that you have if you're listening to Dr. Demartini right now. But tell us about your book. I forgot my point.
It's not my book. I was watching a television show many years ago when I was married to Athena. She's passed away. We were living in Trump Tower. We lived right underneath the Donald. And we're watching A&E biography. Mm-hmm. And Mr. Frick showed up on this show from the Frick Museum in New York, there on Madison and Fifth Avenue.
Okay.
And he said that every night before he goes to bed, he goes to his art gallery and he sits and reads this one book. And he sometimes reads it for a couple hours from midnight till 2 in the morning. And I'm a book connoisseur, and I've done a lot of reading. And I was fascinated by this book, so I went ahead and went to a bookstore and asked if they knew about the book. They said, never heard of it. I went to a book collector and they said, yes, I'm familiar with the book. It's a rare collectible item. There was only 400 sets made and they were given to the wealthiest people on the planet. I said, well, how do I get one? They said, well, I don't know. And it may come up on auction. If it comes up on auction, we'll notify you. It did come up on auction. I told him, I said, here's my Centurion card. Whatever it takes, get it. So I didn't know I was going to pay $28,000 for the book, but I paid it.
Okay.
But anyway, I bought this book. And in there, it was delivered to my place on the 62nd floor of Trump Tower. And it was quite interesting. It was 10 volumes, about that thick, look, a foot. There's 10 volumes, about 3 foot by 2 foot. And they came in wrapped up in brown paper bag and etc. And I opened them up and I started reading the first book. I couldn't put it down, right? And it was basically what was the wealthiest individuals, organizations, and institutions over the last, 6,000 something years, 6,700 years. What did they do? And what was the common denominator in these people, these institutions? And I started reading it, and it said 3 things that stuck in my mind and never forgot since. And I still have that book, by the way, or that set of books. And it said that 3 things common to wealthy people is that they feel by divine providence, because these people believed at the time this book was written that there was a divine providence that was determining their destiny.
Okay.
Or by human sovereignty, for those that were maybe more empowered. They believed that they were destined to serve vast numbers of people. There's a part of them that felt that they were served. I have that feeling that I'm here to serve billions of people on the planet.
Right.
That's why I do. I'm outreaching that many people. So you have to have a feeling that you're here to serve, not altruistically sacrificing for others at the expense of yourself, but with fair exchange. Fair exchange, because the only thing that's sustainable and the only thing that'll ever build wealth is fair exchange. It'll never build wealth with sacrifice. Okay, now, so they had that. The second thing that they did is that they were inspired to raise the standards of human beings on the planet. And by the way, that's not going and buying and investing in a McDonald's.
Right.
It's investing in people who are the greatest in what they do. So those people who are ingenious and creative and at the highest standards of any field, they invest in them to incentivize great ingenious creativity on the planet, to raise the overall standard of humanity. And that's why the wealthy had very fine things. Not to show off fine things. That's not what it's about. It's about rewarding inspiration, not rescuing desperation. That's a big difference. The third thing they found was that they felt that they had transcended, these people had transcended the morality limitations of money. If people think that money's good or bad, money runs them. They have to transcend it and not see money as good or bad, or what is done with it as good or bad. It's not a moral construct.
Right.
It's an understanding that it's a measurement of services rendered in fair exchange, period.
Interesting. I'm reading this book called You're a Badass at Making Money. And Jen Sincero is a great author. And quite honestly, she's she's East Coast funny, right? And it was interesting because one of the things that I used to say to myself all the time is money is the common denominator that divides us all. That is not transcending, right? That is seeing it as polarizing. So I realized after reading this, that's been a belief that I've been operating with that isn't helping me.
Well, it depends on how you put it in context. Money itself is neither good nor evil, because I've met people that are poor and I've met people who are rich, and I've seen them do things that support or challenge my values that I will then label good or bad, which is my limitation. So money itself doesn't mean anything. It just means it's a measurement of what you've done, services you've rendered, and what people valued it at. That's it. And it's also credit, because let's say that I do a service for you, but you haven't paid me, but you owe me money. I can go to the bank with that accounts receivable and I can get money from it. So it's not even a tangible item. It's the perception of value and credit in the marketplace. That's where it is. That's why Amazon did so well, even though it didn't make any profits for many years, because it had people believe in the possibility of what it could do. And now it's paid off.
Right.
So you have to understand that if you're infatuated with money, you'll probably gamble to get it, because you'll be instantly gratifying quickly in your desire center. Your amygdala has a desire center. It wants money quick.
That totally makes sense.
And the person that has a desire to avoid it, it's bad. Stay away from it. It's the source of evil. Neither one of those people are going to end up with money. It's the people that understand it and see it as neither good nor evil, but see it as a means of maintaining a sustainable fair exchange. And if you want to be wealthy, if you're not caring about humanity, to go out and creatively not project your assumptions onto the market, but find out what the market really wants.
Mm-hmm.
You find out what the market wants and provide what the market is asking for, you'll get money. And it doesn't matter what crisis it is, Corona crisis, it doesn't matter. There's somebody making a fortune during the Corona crisis.
Yeah, I know.
Amazon is making a fortune during it. I'm making a fortune during it. It's not anything to do with external things. As long as you think of the external world as the cause of it all, you missed it.
Right, right.
It's your perception of opportunity, looking and spotting opportunity. You won't have that value. If you don't have a value in wealth building, you don't have a value in serving people, you won't have that, you won't notice it. You'll pass up all the opportunities, and you'll project narcissistically assumptions onto the marketplace at what it needs based on what you think it needs. And that doesn't build you wealth. And a lot of entrepreneurs start out thinking they know what the world needs, I need to give it to them, instead of finding out what the world is wanting and then finding out how to articulate what you want to give to them in terms of their needs. And it's a overlapping Vesica Pisces of two overlapping circles, what the world wants and what you want to give, and finding those matching, where you're inspired to give and they are inspired to buy. Now you've got wealth.
Right.
If you care enough about humanity to find what they need and find out where that overlaps of what you're inspired by, you got your niche. And that niche has to be not assumed. It has to be when you know you nailed it, people buy. There's a demand. If there's no demand, you haven't met a niche. You just made an assumption that people wanted something. That's not the niche. The niche is when you see a demand. When people, I want that. And they'll have a bigger demand. The demand is growing. That's a sign you've got something. So if you care about somebody, you're going to care about that, finding that real need. And there's no struggles with money then. There's only struggles when you project assumptions on what the world needs based on your own projection, instead of actually finding out what it's really needing and then finding out where it overlaps and giving it to them in a way that inspires you. That's the key.
It's going back to what we talked about last week, Dr. Demartini, right? It's about providing the solution.
Yeah.
It's about being of service, providing a solution. So there are many people like sitting at their homes worried right now, not thinking about a solution. And of course we get that, but it is finding a pathway to what the problems are and not designed by your circumstances.
I want to read to you something. I had a lady a student that I've never met that sent me a question. She said, I'm sitting at home, I'm living in fear, I'm anxious, I'm uncertain, I don't know where to go. And I just wrote her back this. I said, there is no fear of the unknown. I want everybody to get that. There's no such thing as fear of the unknown. That's a real important thing don't ever allow yourself to buy into the idea that there's fear of the unknown. That is for ignorant people. There's never fear of the unknown. There's fear of the content that you have ruminating in your mind. And you have control over that content. So I told her, I said, there's no fear of the unknown. There's only fear of what content we have in our minds at the moment we feel some fear. And it is an assumption that there's about to be more loss than gain, more negative than positive in the future that's in your mind. That's what you're thinking about in your mind. And that's irrational, because there is no loss without a gain. There's no drawback without a benefit. There is no one-sided magnet in the world or anything that's one-sided. And it's wise to itemize each fear one at a time, to stop and quit running the idea, I don't know what to do, I'm going crazy, I don't know what it is. Stop. That's irrational. Stop. What specifically are you fearing is about to occur, and nail it and itemize them.
And itemize them.
Itemize them.
And you mean write them down, bullet points.
Write them down and look at what exactly, what is going on in your mind, because the
Yep.
fear is nothing to do with the world around you. The fear is your perception of the world around you, and you have control of your perception, decision, and actions. It's irrational, and it's wise to itemize each fear one at a time and identify a strategy to either reduce the potential assumed loss or find the potential gain and upside to each assumed fear. Because there is no one-sided event. There's always two sides.
Right.
You know, we've had these events in our life we thought were terrible, and then a day, a week, a month, a year, 5 years later, we look back and go, oh, thank God that occurred. And then we go, why have the wisdom of the ages with the aging process? We can have the wisdom of the ages without it. By looking right at that moment, what's the upside? Because there's never a downside without an upside. You just have to be accountable and diligent enough to open your eyes and look. Instead of focusing on the problem, look at the solution. It's sitting in front of you. It's wiser to be a solution-oriented more than a problem-oriented. Once balanced, the fear subsides. And fear is a guide to us to rebalance our misperceptions. It helps us break our fantasy expectations that something external is supposed to solve our problems, and that's always our own perception, and grounds us to embracing what is as it is instead of what we wish it would be, because we're holding on to a fantasy about how it's supposed to be. To then get focused on the highest priority action identifiable and stick to priority actions each day to rebuild momentum towards a greater tomorrow. That's what I wrote her. And that is so simple. But the reason why people don't do it is because they ruminate and dwell on their fear that they have created in their mind that they're pretending they don't know what it is. And they look externally for sources. The COVID virus do it. I call COVID Saint COVID.
I know you do. I know.
By the way, in Sweden, now if you're watching what's going on in Sweden, it's a controversial thing because they didn't do all the stuff that the other countries are doing. And they've only had 600 deaths there out of 9,500,000, which is a little higher than what we have in the States. But they didn't stop the economy. They just did a few restraints on it, not much at all. 50 people gathering at a time, but they've only lost 600 people. Now, ratio-wise, that's still a little higher than the States, but they didn't stop the economy. The economy is still going. And they're looking at it from a different perspective. Now, I'm not saying theirs is right and wrong or whatever, because I don't know. Because they're thinking we're going to build the immune system. We're going to let people get sick and die, and we're going to let the strong get going, and we're going to help the future.
I get it, but we'll be looking back at the history books at this time, figuring out whether or not we did the right thing or not.
We don't know. There's no way knowing. And there's always two sides to it.
Sure.
There's two sides. The question is saving a few lives versus the economy? It all depends on people's values.
I was just going to go there. I was just going to go there.
Right now, there's going to be new kids born probably, and there's already abortion rates drop. The people at the abortion clinics are out of business right now. They're not having any abortions. So people are having babies. And the number of babies that I just read are higher than the number of deaths.
Everybody that's listening, I want you to know that you can go to Dr. Demartini's site and take the value determination. It's right there, I believe, on your homepage. I mean, I've been following you, John, for so long now that that I know your website pretty well, but it's got to be easy to find if you go to drdemartini.com and then take the value determination. And here it is. During times like these, you know, financial wealth and the value of it becomes first and foremost, because people have been.
You just know this, if you think long term.
Yeah.
Can I share a few more things? Do I have enough time?
Oh no. Oh yeah. Absolutely.
I got to share something.
I'm not cutting this off at all. It was just a perfect.
Okay. I have this woman.
Here we go. Get ready, everybody.
I have this woman that I was planning on having dinner with in Houston in December.
Okay.
And it turned out that she wasn't able to make it, so she sent a friend.
Oh, jeez. That was nice of her.
A lovely lady that I had met, beautiful lady, very stunning lady. And I thought, great, this is fine with me. I'll go to dinner with her. And so I go to dinner with her, and we started talking, and I asked her about herself. And she says that she's a salesperson for one of the big, Saks Fifth Avenue.
Okay.
And I said, fantastic. And she says, no matter what I do, I can't get ahead financially. I just can't do it. And I said, well, wait a minute now. No matter what you do so far, you haven't gotten. Let's rephrase that. Let's look at what you're saying to yourself.
Right.
So far, with the strategies you're playing, you haven't got ahead. Now, this lady made over $100,000 a year, and she couldn't get ahead. It has nothing to do with how much you make. It has everything to do with how you manage it. So I said, so what are you spending your money on? Let's get your disbursement out. And let's actually look at what you spent money on this last month, 2 months.
Okay.
And she made a list of it. And I said, okay, can you see how you're spending your money? And she goes, yeah. And she was feeling a little awkward about it, but I said, let's look at how you spend your money. I said, let me explain to you when you buy something. Okay, you buy that nice outfit. And she bought $1,000 outfit. One was $895 plus tax. It was about $1,000.
Well, she worked at Saks.
Right. Okay. So now I said, okay, you're getting a discount and they're still getting it. They're buying it at half price and selling it double or more. And you're now knocking off 10 or 20%. They're still making money off you working for them. So let me explain something. When it cost you to buy that dress, are you aware of how much it costs? She says, yeah, it's about $1,000. And I said, no.
No, it's not.
No. That's why you're poor. And she goes, what do you mean? She says, you probably expected to kind of go on a date with me or whatever, but let's do something that will make a difference in your life. Because
you're always working, John, but then again, you're not working.
My romance was out the door. Okay. So here's the deal. I said to her, I said, how much money do you make in a year? She says 100,000 plus. 107, 109, 111, it varies with commissions. I said, how much money do you save and have net worth at the end of the year from that? And she said, maybe it fluctuates between 1,000 or 2, and then eventually I lose it. So you spend it. I said, so you really have no money. You've worked in all these money and you've never kept any of it. She goes, no, but let's just give it 1% because you save that and it disappears again. Because the real true net worth out of all the money you've ever made in your life tells you where value of money is. If you got nothing to show for it, you have no value on money. So what I did is I made her go and we narrowed it down conservatively, nicely at 1%.
Okay.
I said, so that means you have to buy that dress at $1,000. You got to earn 100,000.
That's right.
That means you got to work for a year to buy that dress. Now, that dress at $1,000, if you invested that $1,000 and it doubled every 8 years, that's reasonable. I can get money to double every 8 years. So let's just say you're now 38, 8 years would be 46, that's 2,000. And then 54, that's 4,000. Then 62, that's 8,000. Then 70, that's 16,000. 78, that's 32,000. So let's say you live to 86 years old. And that's, how much was I have? 32, 64,000.
Right.
So the potential loss of money by spending it on that dress is 64,000. And the cost is 100,000. That's $164,000 for that dress.
I could just imagine her face.
Her face was like,
right.
I said, now let me explain something. If you spend it, you are immediately gratifying on impulse buy with your amygdala and buying a depreciable consumable that goes down in value. How many times did you wear the dress that you bought, say, a year ago or 2 years ago? How often do you wear it? She smiled and she said, 4 times. I said, okay, so 164 divided by 4 is roughly $1,000 to wear the dress for the day. It's cheaper to go rent a high quality dress for the day.
Right.
And use it for a special event and then never have to wear the same dress again by going to the Gallery of Wearable Art in New York and have it sent to you and have 16th century gowns by the Queen for $500 for the night and have an amazing night and have some fun, have some entertainment, and take pictures and make a notoriety out of it and use it as a marketing mechanism. I said, so you got to look at what you're spending your money on, because people that value money put money into things that go up in value, and they think long-term on the cost of the past and what it could do in the future before they buy, and they use their objective reason instead of their impulse buy. And if you buy impulsively, you're going to be putting money into other people's brands at the expense of your own brand. But if you do it the other way, you're going to build a brand that's going to eventually pay you a fortune. You tell me which one is going to be long-term to your advantage.
Right.
And she goes, but I want that dress. And I said, okay, then don't bitch about your financial situation.
Sure. Right. It's either one or the other. You
Yeah.
can't have it both
But the
ways.
thing is my wife, when I first met her, she had a tendency to want to go to Fendi and all these places and stuff. And I moved her from stockings to stocks. I got her to buy stocks in the 1997, 6, 7, 8, 9 to 2000. I got her into stocks. And she started making, and I started running a projection of how much passive income was coming off her stocks.
Mm-hmm.
And then I said, and I was reminding her every day, I said, by the way, now that you're investing, that the equivalent is it bought you a pair of stockings on average right now, passively, at only 1% of a pack of stockings every single day because you invested. So now it's buying you the stockings. Your stocks are buying you the stockings. And I said, and I started converting it into how many shoes it could buy and how many stockings it could buy and how much beauty care and how many dresses it will buy you over time. And kept running the projection to incentivize her to keep purchasing assets, not liabilities.
Well,
and she changed her life and built financial independence in a matter of a few years.
you know what? Making money feels good. It does.
Yes.
Right? You know, I mean, it doesn't have to necessarily put you in a power position, but you know, I mean, if it's $10 or if it's 100,000 and more than that, it feels good. And feeling good is, you know, quite frankly, okay with me. I'm going to segue over to the stock market since you mentioned it, because I unfortunately took a really bad hit during the Wall Street debacle back 10 years ago. And I know that there are a lot of people in that boat. Now, here it is. I learned a lot from that experience because I'm not running emotional this time, but I was running emotional that time. And guess what happened?
You sold.
Yes, I did.
If you didn't sell, you wouldn't have lost anything.
And I can't continue to kick myself for that, but that's exactly, you know, and here it is. What I didn't realize until going through the breakthrough experience, once again, I'll continue to drop that class because it's a great class. I felt a lot of shame around that. And this is what I used to say. I was a Jersey girl that did good, and then I wasn't smart enough to keep it. But here it is. I continue to make it. It's most certainly a value of mine, but those were some hard earning years that you know went away. And quite frankly, I don't say that I lost it. I say that Wall Street stole it.
Yeah, but the reality is you gave it away by selling it. If you had just left it there, it would have gone right back up. It would have been within months, it would have been back up again.
Right.
I bought in 2008-9. I bought the Dow at 823, 8,230. It's now 24 almost. So,
John, what would you say to the individuals out there as far as wealth building that have gone through that blender?
Fantastic. Write down the benefits you learn from it. You'll know now not to, you obviously were, anytime you put your money into something that has volatility without a cushion,
you're
going to run risk.
Right.
To react emotionally. That's why you always have cushion. Bill Gates, these guys have cushions of magnitude, very magnitude. I mean, Warren Buffett had $128 billion in liquid cash recently. Cash.
Yeah.
I keep over a year's worth of cash sitting on reserves. That way I never worry about it. And when crashes occur, I just grab crashes. So people that know how to manage money don't let the market impact them whatsoever. The market means nothing. When the market goes up, it looks like you made money, but you're now paying more for a share in a stock. If it goes down, it looks like you lost money, but you're now buying it at dirt cheap. Right. If you don't pay attention to those volatilities and keep to the mean and keep your focus strategically, you make money.
And there it is. Keep to the mean. We talked about
focusing on trying to get rich quick or trying to fear of losing it. If the market can fluctuate more than 10%, people get volatile. But if you build up a cushion, so no matter what the market does, the rate of that market volatility never exceeds the 10% with your cushion. You won't stop your strategy and let emotions run your money. Money is automatically destroyed by emotions and only built by strategy. You don't find animals wealthy. You might find humans with animals wealthy, but not animals. Humans are the ones that get wealthy because they have meaning and they have intuition and they have reason. Those are the three things, not impulse, not gambling wishes to get rich scheme, not zero-sum game trading mechanisms that are volatile and gambling oriented, speculative, but true investments by buying assets that serve great numbers of people. You buy companies that serve people, that will keep serving people into the future, and put your money there and leave it there, you will make money.
Sound advice, everyone. Sound advice. John, I can talk to you every week from here on out. But I find it so fascinating because of course I knew I was talking to you today, and I was thinking about the universal laws, and our last conversation ended on the topic of mastering universal laws. So when I was reading this book while my little kitty was passing away, who I love dearly, it spurred on a lot of emotion for me in the way of, you know what, anything you can't say thank you to is baggage, right? I'll take your words, right? Anything you can't say thank you to is baggage. And I took that home because, you know, the past just trips us up. Even if we have even if the blinder is up, if the blinder is down, we don't want to look in that direction at all. If we don't deal with it and do the inner work, it's going to trip us up.
Well, anything that we have an emotion about, we'll run our life until we love it. That's just the basic principle. Anything that we infatuate with or resent will occupy space and time in our mind until we actually balance the equation. Everything in life is like a mathematical equation. Equanimity is a balanced equation. It's a poised, present state. But the second you have volatility and you're infatuated or resentful, that which you infatuate or resent, that you have subjectively biased views of, will occupy space and time and keep running it. It'll run your life. You can't escape what's stored in the subconscious mind. It'll make you impulsively seek or instinctively avoid the misperceptions that are associated with anything that hasn't been loved. When you eventually love it, you liberate yourself and don't have the outer world run you, your inner vision runs you. I said on The Secret, when the voice of the vision on the inside is louder than all opinions on the outside, you get to master your life. That's the key.
Yeah. Interesting. So we can continue to talk about universal laws if in fact you'll come back next week. Dr. Demartini.
I don't know. I better look at my schedule, look at it, but I'm just grateful that we have the opportunity because somebody out there hopefully will watch this podcast and think twice about the way they're spending their money. But I know that my life had no asset accumulation until age 27, almost 28. And from that day on, my life changed financially because I learned grounded reality check about wealth building. And I've taught thousands of people doing it, and I'm absolutely certain it can be done. So doesn't matter what you've been through or what you're going through. It just matters, are you going to willing to apply the principles that will get you your result? It works.
It does work. And I believe you're talking about the prophecy, right? Are you
talking? Well, in my second tiered program, the Prophecy One Experience, I address that issue. But I have lots of products that people can do. They don't have to wait for that if they want. But that's where I actually address that. I give a whole day on just wealth building. And we just spend a few minutes on it, but a whole day. And it's mind blowing. And I don't know of anybody that's been to that course that didn't have a trajectory financially. I was doing my master planning program in Sydney, Australia. We had 120 people attending. And I asked, how many of you have been to prophecy? 92 had been to prophecy. How many of you are now financially in another position and on track towards your financial independence? 87 people put their hand up.
Wow. Almost 92. Half.
Almost out of 92.
Oh, out of 92.
120 people attended. 92 went to the prophecy. 87 were on track now for their finances. So it impacted their life significantly.
That's great.
All they did is just electronically did it. I've gone over to people and just electronically set them up at lunch. I said, we're going over to this company. We're going to set it up from your bank. We're going to do it. It's just going to be done. You're not going to think about it, emotionalize it, or doubt it, or question it. We're just going to do it. Just do it. And watch what happens. And they all go, God, I wish I'd have done this years ago. Such a simple thing.
Awesome. Everyone, Pearls of Wisdom by Dr. Demartini. Thanks again for being here. Stay on the phone or stay on the line while I disconnect with everybody here. But everyone, Patty D, your coach and job strategist, sending you lots of love, nothing but the best. Everything you can be thankful for will just lead you to a different path. And I'm just so happy that you're here with us. I want to thank you for your time. Lots of love. Take good care and stay well. And I go click.